Thanks for joining us at XM.com for the weekly outlook. I'm Christina Marujos, and joining me today is Mario Sachikiriakos, investment analyst. We'll be having a look at the week ahead. Now, the highlights of this coming week are, without a doubt, the EU summit and whether European leaders will finally agree on the virus recovery fund, and of course, data out of the US. But before we get into that, Marios, let's have a closer look at this pattern that has emerged in the markets lately. We talked about the conflict between the bears and the bulls a few weeks ago, and yet despite a growing number of virus cases, especially in the U.S., markets don't seem fazed by the gloomy numbers. Encouraging news regarding a vaccine seem to add fuel now to this ongoing conflict. So where do you think it's heading?
Hello, Christina. Indeed, we saw some very encouraging headlines about the vaccine this week. Plus, another encouraging headline, in my view, was that more and more US states are now making it mandatory for people to wear face masks in public. And that, I think, has helped to calm some fears about a continued acceleration in infections. Now, on the other hand, we've also seen the bears receive some fuel, let's say, this week. So specifically, if you look at some high-frequency indicators coming out of the US, for example, credit card spending data out of the big banks, they suggest that the recovery is indeed leveling off. A lot of states have paused their reopening plans or have even put them into reverse, and that is generating some fears that we might soon be faced with a new wave of unemployment. It's a battle. Both sides have gotten some positive arguments to back up their case. Now, as far as the markets are concerned, we haven't done that much this week. Yes, the overall narrative was a little encouraging, but the key word is a little. Most charts are still trapped in ranges. We are near the optimistic end of those ranges, so stock markets are near their recent highs, the dollar is near its recent lows, but overall, we're still range bound, which I think shows that the market doesn't have a lot of conviction. Now, what's happening over the coming weeks? I think that the risk to reward profile for riskier assets like stocks and commodity currencies doesn't look attractive at all from here. And I think that any further gains may be increasingly difficult to come by. So the first and biggest factor is that the Fed's balance sheet has been shrinking for a month now. It hasn't been shrinking a lot, the decrease hasn't been massive, but it still implies that some liquidity is being drained out of the system, which usually is a negative sign for riskier assets. The other factor that is troubling me about this rally is that the vaccine headlines don't seem to have the same bank to them anymore. So yes, markets spiked higher on the Moderna vaccine headlines this week, but the increase wasn't dramatic and we didn't manage to break out of the ranges that we've seen over the past month. And in fact, one day later, a separate report for a vaccine by Oxford University went almost unnoticed. So the coming weeks will also bring a few risks. The biggest one, I think, is how much more stimulus Congress will authorize the US, because several of the aid programs that have been approved in recent months are set to expire at the end of this month. So long story short, all this doesn't mean that the markets can't move higher from here, but that the risks seem a little asymmetric to me. The bears seem to have an edge right now, but that could change very easily. All it would take would be some encouraging headlines coming out of Congress about a stimulus bill, for example.
We'll look at the U.S. in a moment, but before that, let's turn to Europe, because it's been taking them some time, but maybe the EU leaders are finally ready to agree on the 750 billion euro virus rescue fund. The summit takes place over this weekend, so do you think the euro will have a happy Monday?
I'm not that certain. So let's put it this way. The euro will open with a gap on Monday either way, depending on how these negotiations go. I'm in the camp that thinks they won't strike an agreement right now. To be sure, they will strike an agreement at some point. The question is, will it happen this weekend or in August, for example? Judging by recent comments from the countries that are resisting this stimulus in its current form, so the Dutch Prime Minister, for example, said earlier today that he thinks the chances for a deal are less than 50%. I'm not an optimist. I think that what the EU leaders do best is delay a little bit, and I think that's what we'll see at this weekend summit as well. If that happens and we get no deal on Monday, the euro will probably open with a gap lower, since we've seen a lot of optimism for a deal being priced in lately.
And finally, let's look at the data releases we're getting out of the U.S. this coming week. We have preliminary PMIs for July out on Friday. Are they likely to move the dollar? And if not, what will?
Well, I don't think they will. The markets generally pay more attention to the ISM PMIs. Now, as for the dollar, it will be a combination of risk sentiment. So the dollar has become a safe haven throughout this crisis. It moves in opposite direction to stock markets. That will be the first factor. And the second one will be expectations for more stimulus, both from Congress and from the Fed. I think that the risks surrounding the dollar are tilted to the downside over the coming weeks, and that's mainly tied to the Fed. I think that the Fed will act again in its late July meeting, and if we see expectations for that build in the markets over the coming week, that would argue for some downside in the dollar from here, although the biggest driver will probably be risk sentiment and stock markets.
Marios, thank you for joining me today for the Weekly Outlook, and thanks for watching at xn.com.